I love doing these.
I apologize for that. Hello and welcome to Afternoons with ACEs. We're sponsored by the DC and Mid-Atlantic OATUG, FSCP Solutions, and Creel Consulting. My name is Kelly Fitzpatrick. I'm the Marketing Coordinator and Public Sector Account Manager for Creel, and I'm on the board for both the DC and MA OATUG. I will be moderating today's conversation discussing Chart of Accounts. This webinar is the first in our series, Afternoons with ACEs. More than a webinar, the format is similar to a podcast and will be conversational in nature. All attendees are placed in listen-only mode and will remain that way throughout the session. There is a chat feature on your Zoom console, and if any time during the session you have a question, you can place it in the chat box and use the raise your hand feature to alert me of the question. I'll transmit that question to our guests at the appropriate time so they may respond. Joining me today, I have Oracle Applications Aces, Lee Briggs and Thomas Simkiss from Creel, and our guest is Oracle Applications Ace, Mohan Iyer from FSCP Solutions. And with that, I'm going to hand it off to them to get started. Thank you.
All right, thanks, Kelly. So this is our first one of these. We do plan on doing more of these. The plan initially, I think, is we're going to try to do one a month, and we'll do it in a webinar format because that's what we know. But assuming we get popular, we'll probably do it as a podcast. To my right, your left is Lee Briggs. I'm Tom Simkiss. Lee was the first ace in our company. I was the second. Joining us, we have Mohan Iyer, as Kelly said, from FSCP Solutions. How long have we known each other, Mohan? We're going back like 15 years now.
And you might be on mute, Mohan. There we go.
No, I'm off mute. Yes, I think we go way back. It's been fun knowing both of you, and it's always a blast. Thank you very much for inviting me.
Okay,
so I'm sorry, Lee, go ahead.
Thank you. So one of the things we're trying to do with this session of podcasts, webinars, whatever, is actually not have any slides. You saw slides that Kelly had at the beginning for the Afternoon with ACEs and with our sponsors, but everything else is going to be a discussion, and it's something we've felt that we've never had any of these series. Most of it is talking through slides and reading off the words on this. This is purely discussion, and that's the kind of cool thing about having people logging on and asking questions as we go through. Today's session, we actually asked Mohan to join us on this session to talk about Chart of Accounts. And really, this is something that is typically at the beginning of an implementation. If you're thinking of going to EBS, cloud, or whatever accounting solution you're looking at, one of the first things you start thinking about is a Chart of Accounts. And really, Mohan, I guess the question we wanted to ask first, we're going to discuss first is, what is a Chart of Accounts? What does it mean to us if we're not accountants?
I would say the easiest way to explain that is your Chart of Accounts is kind of the heart of your ERP implementation, and it gives you what most accountants want, which is financial statements. So if you look at that from that perspective, that becomes the cornerstone or the foundation of what your ERP is able to give you from a financial reporting perspective. So that's the focus I think that we should get to when we start talking Chart of Accounts. And I know between the three of us, and obviously for some folks on the phone as well, we've been through multiple implementations and we've seen discussions go one way or the other about what we should not have in the Chart of Accounts. And I'm sure as we start working through these discussions, we will find flavors of discussions that have changed that from just financial reporting to a lot more. And that's always a challenge. You have to address a lot of more reporting needs, but I think the key question, and I think Thomas, you, Lee, you, myself have had this discussion before. If you don't want it on your financial accounting reports, do you need it in your Chart of Accounts? I won't say you don't. I think the question is, do you need it in your Chart of Accounts? Because that's kind of a qualitative discussion, right? It's all dependent on what exactly is the focus of your financial reporting team.
Yeah, that gets to I think we'll probably hit this later on, I guess, like the fat ledger versus thin ledger. I always ask the question when I do these implementations slightly differently. And I always say, if you want a financial statement, income statement, balance sheet, whatever it happens to be, by whatever it is, it has to be in your chart of accounts.
Yes.
I've seen a lot of people that they ask me, "Oh, I want a financial statement by customer." I was like, okay, really? Do you really want to allocate like expenses all the way down to EBITDA to customer? Oh, no, 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 no. I don't want to do that. I just want to know, what my revenue is and what my costs are. I'm like, okay, that's really not a financial statement. You don't have to have it in your chart.
Right.
I guess, a slightly different question, and I get this question a lot, and I kind of have my opinions on it, but we really want to get yours on it, which is statutory charts, right? So one of my favorite implementations that we do quite frequently is France. As you know, they have a statutory chart.
Mhm.
What is your thoughts on, do you go, primary, secondary ledger? Do you go with this primary is France, your statutory chart, your secondary is your corporate, or you do it the other way around? What are your thoughts on how you do that and why?
So I think I've seen people do it both ways, and each of them has their benefits and their drawbacks. So let's go with the corporate chart of accounts being the primary, and your secondary being your French chart of accounts or any local chart of accounts. The challenge becomes that in most cases, the local chart of accounts actually has a lower level of detail than what you, specifically in the US GAAP reporting mechanism, need to capture and report on. So the ground rule of the fact that if you want it to be in report, if you want it to be reported on, you need to capture the data at the lowest level of detail. That being said, if you have your secondary ledger with your secondary chart of accounts, you will need to intersperse all of your French chart of account values into your US GAAP chart of accounts, because that's where you're capturing the data.
Yep.
So that's the first challenge. And in fact, interestingly, that's the discussion I'm having at this point with one of my customers that I'm working with. And they decided to go that route. And now there's a challenge because you actually see a list. And because I'm trying to help them try and manage that, what happens is that all the French chart of account descriptions are also there in your US GAAP on the list of values. Now, you can restrict that from people seeing it, but guess what? When people are actually looking at reporting, and when they actually see a balance there, when they look at consolidated statements, it shows up. Maybe
Yep.
it may not have a balance in your ledger. Now, so that's one challenge, and you got to manage that. Right? I'll pause there if you have any thoughts that you want to add to that before I go on to the other option where you have it the other way around.
No, they're great points. And I think whenever I've done it, I'd be curious to see, my rule of thumb is you go detail to summary. It's just easier, right?
Mhm.
So if you've got a relatively simple statutory chart, and I've never seen that, by the way, but I'm sure there's a couple out there, then I'd probably go corporate to statutory. But whenever I've done statutory, it's invariably far more detailed than my primary, and I've just had better success. And again, I'll pick on France too, and I don't know if this is still the case because I haven't done France in a couple of years, but they used to teach the kids in college. They used to teach them the French statutory chart. So the benefit of that was you get somebody come into your organization and you bring them in. You don't have to train them on how to code something. They already know it.
Mhm.
And we do the translations of the corporate chart behind the scenes. So yeah, I prefer it the other way.
Right. And if we do it that way, so the other thing that happens is, I think it's a slightly different flavor of that, is that, or maybe the question is slightly different. If you do have that, so does your primary ledger become the French chart of accounts ledger, and your US GAAP becomes your secondary, which means that you do capture in detail. However, when you do the consolidated reporting, what runs up to your corporate ledger or your corporate reporting data set would be actually from the secondary ledger. And a lot of people have a concern about that because they say, hey, we are corporate and we actually want primary ledger to be, the one that we use as corporate. I don't think that's intentionally them saying we don't want you to actually have the primary be something that you transacted. I think that works pretty well. Like you said, you capture in detail and then you summarize to what you need. And then that becomes what rolls up to your consolidated reporting. And you're right. If you don't capture in the detail, you'll never be able to report on that. And if you do it any other way, it's just too many cycles that you need to do to go from A to B. And like what you said, capture in detail, summarize to what you need, and then make sure that that's summarized from the corporate chart of accounts perspective or corporate reporting perspective becomes what rolls up to your corporate reporting set.
And we also see that in the federal world. So the federal world, we have essentially, it is a unified chart of accounts, right? So you start getting to entities which are kind of quasi-federal. So some of the departments, some of the department clients we work with, they have their reporting that they have to get out in STARS format, but their reporting is so different, but they still need to get that STARS stuff out. So it comes to the same thing of, well, I know I need to get to STARS eventually, but I don't want to build my business and my business model, my business reporting on that. Go with my chart of accounts and somehow get back to STARS out there again. But STARS has so many segments out there where I mainly have to populate a couple of them. Same thing with the UK government, where I think the UK government, we had 18 segments, 19 segments like that, but you're only populating 3 of them. So it's still, I will have my chart of accounts in whatever structure I have, and I just have to be able to get back to those 3 segments and populating everything else, as you go through with default values or whatever the required values are, but getting back in that kind of way.
So that leads to, we have our first question, and I'm going to take this one first, and let's get from Mohan, but I have an anecdote, and this is a true story, and I'm going to respond. So we have a question from Joseph Core. How many segments are in the chart, and what's the longest you've ever seen? So I'll answer that, and then I'm going to give an anecdote, and I'd like to hear Mohan and Lee's thoughts. So most of the clients that I service, and that I do financial services, professional services, manufacturing, anywhere from 6 to 8 is pretty standard. I almost always recommend that you have 2 future segments. My experience is about 50% of my clients have used it. The other 50% have not, but especially in cloud, where you really can't change the chart. In EBS, it didn't matter as much. There's tools like from Apprentice, they got the chart of accounts told you could always kind of update it, but you're limited in the cloud. So, as my friend Lee always likes to say, better to have and not need than need and not have. But other than the UK government, I had a client that will remain nameless that wanted a 17 segment chart of accounts, and the 3 middle segments were alphanumeric, and they were 25 characters each. And I did the implementation with a senior when I was a kid. We were really young, and we made him sign a decision request because we were like, man, this is a really bad chart. You're going to be really unhappy with us if we do this, but you're the customer. If you want it, we had him sign a decision request. And probably 14 years later, I went back to the client with a different consulting company, and I had saved the decision request because it was like one of the first things that I ever submitted as a consultant. It was like a big deal. And I'm in a conference room. Hi, I'm Tom Simkiss. We're here to talk about at the time it was an R12 upgrade. And somebody in the room was like, Tom Simkiss, are you T Simkiss? And I'm like, kind of goes without saying, doesn't it? And he said, you're the guy that blamed the chart of accounts. This is the worst chart of accounts in the history of the world. And I'm like, and I reached into my bag. I'm like, here's my get out of jail free card. I told you not to do it. So we consultants, we really try, we'll do what the customer says. We really try to turn them out. So 17 with 3 middle characters was the longest I ever had. What do you got, Lee?
So I'm going to go the opposite way. 17 is the longest. The bare minimum you need is 3.
Yep.
Have to have 3. So let's go through them. First one is a balancing segment. This is essentially, I have to be able to get a trial balance. A trial balance by definition it gives you something that has to balance. So you have your balancing segment, and typically it's something like company, legal entity, fund, something like that. Second segment you have to have is natural account, right? So that is essentially what appears on a balance sheet or an income statement. So cash, revenue accounts, it's something that is an asset, liability, equity, revenue, expense type account out there. You have to have that. Third one you have is department. Department's used by 2 areas. So department is fixed assets. Fixed assets gives you a lot of reports by department. I actually call it cost center, but department cost center, it's that kind of thing. Fixed assets, if you're using that makes a lot of use of that segment. The other segment that uses it, and this is the weird one, HCM uses that. When you start doing HCM implementations, HR, human resources, something like that, they have a lot of department managers which look at the cost center segment. So bare minimum is 3 segments. As Tom says, I've always gone, with future segments, always have 1, 2 out there. I've actually got 1 client with 3. Longest I can think of is the British government entity we were talking about, who had 18 segments. I think I've done 5 segments before, and that was with a future segment. The other segment I like to put in there, and again, this depends from client to client, is an intercompany segment. It's so much more flexible to have an intercompany segment to allow you to do intercompany transactions between entities, to have a dedicated segment for it, as opposed to 17 different natural accounts in your due tos and same in the due froms. That helps you out a lot. But that's my story. Somewhere around between 4 and 10 is typical.
So Lee and I are both based on the East Coast, just outside of Philadelphia, whereas my friend Mohan is based in Silicon Valley. And he gets some really cool clients, which we shall remain nameless. But you're at a pretty cool client today. Without giving them away, what's their chart look like, and what's your longest or some of the things that you've seen that you really called into question?
So just to go back to what you said about the bare minimum, right? I think I'll resonate with what Lee said, and I think I would say 4, which includes the intercompany account, because that just makes life easier.
Yep.
So you start off with 4, and I've had companies and I've always been on the fence about the future segment, but I agree with you, Thomas. If it's the cloud, I think you should go with future, at least 1, if not 2. And I have seen a lot of companies, especially manufacturing companies, who would like to have the product as part of that. So I think, like you said, it's anywhere between 6 to 10. Maybe the optimum is 8, 7. Not really sure if the number is actually that great decider on what we need to do. But a couple of things, and I think I would also like to add an anecdote about the longest segment. I actually did not know that the UK government had 18 or 19 segments. That's good information to have. But I was at a client, and actually we had not started the implementation, and they were trying to design the chart of accounts, and I got pulled in because there were a lot of questions that they needed to answer, and somehow somebody said, maybe we should ask Mohan. And I was on the phone, and this was the time that I think Oracle had their conference, the first or second modern finance conference in New York City. And
Yeah.
I was at that time, I was heading out to the airport, and I was in the cab while this meeting was going on. And in fact, I was on the call even till I crossed over after security into the waiting room for the waiting area for the plane. So it was a long discussion, most of it in the taxi cab. And they had decided that they wanted 26 segments.
Oh.
And so I said, you have got to be kidding. And the answer I got from the other end of the line was, Oracle says you could have 30. And I said, oh, yes, it does. And they said, so why can't we have 26? I said, it does not mean you can't have 26. It just means that if you have 26, you're going to have a very difficult proposition trying to go ahead and actually make it work for you. Mm-hmm. And they actually had the state, it's a US company, they actually had the state in their chart of accounts twice, because they were a company that required to report by state. And that comes back to your point, Thomas. Do you need a financial statement based on that? Not really. It's a statutory report that we need to give by state so that we know what business we did. And so eventually we had a long discussion. 1.5 hours later, they decided that the company that they were working with, the implementation partner, they wouldn't go with, because I said I would refuse to sign off for a 26 segment chart of accounts. And we actually got Oracle on the horn to talk about it with them. And Oracle actually told us that the largest that they have seen, and which is in play and working, is 22. Mm-hmm. And not that that means you should go up to 22. I would get nightmares if I was to support and implement at that client with 22 segments.
Well, you know that you're going to look at it, right? And you know that half the segments are going to be 000 or 999 more than half the time. You just know that,
mm-hmm.
right?
I mean, I think the 6 or 8, that's the magic number. Yeah. I think 6 or 8 is the magic number. And the other thing that happens is that people who design this, and this is just my opinion, that people who design this are designing it based on the fact that at the end of the day, they're going to get a report which will give them all this information. Mm-hmm. They don't have any idea about the time that an AP analyst or a GL person is going to spend entering data into that and having to make discussions or decisions about which one to choose from the dropdown that you get. And mind you, those things can really get long.
Oh, absolutely. We've actually done some work. It's great hearing pain stories. It's not really a pain story. It's great hearing these kind of pain stories. And we've done some implementation where states will have statutory statutory chart of accounts for any entity that's doing business as the state. We've had one recently which had two natural account segments, like one segment for revenue accounts, one segment for expenses, not one place. I think it was like segment 4 and segment 6, something like that.
Yeah, yeah.
You
just
mean
code some-
not sub-account? This is an actual account.
It was an
Actual
actual
account.
account. Yeah, they had a book.
So you have revenue, which is segment 4, which has a valid value, and then the expense segment, which is 6, will have 000.
Yeah, and the way we had to do it, it was, we really had to have, like, I forget which segment, we designated one as the account segment from an Oracle perspective.
Mhm.
And, we set up dummy values. So I set up a value called expense, so that we set up a cross-validation rule. So when you're going to code an expense, you would code the balance sheet account to an expense, right? And we had to classify it as equity. I had to do it. I had to classify it as equity. There's no other way to get it to work. It was interesting. We got to do what we wanted to do, but
Now, the other thing I'd be interested in, so you have state in there, or some flavor of state in this chart of accounts. It's one of the cool things, certainly when you go to cloud, EBS, you can kind of do this. But with the advent of Essbase and having the cubes out there, we can have hierarchies within segments. We've found a lot of places, and it really rings true in retail, especially where you have some kind of location in your chart of accounts. Actually using multiple hierarchies out there to get me state reporting to say, okay, all these stores roll up to this state for one hierarchy. But somewhere else, no, that's in a mall, or it's a standalone store, or it's online or something, having a separate hierarchy for that. So you're still coding every transaction to the Philadelphia location. But depending upon how you're slicing and dicing this, you can say, here is an income statement by state or region, because Philadelphia rolls up to Pennsylvania, which rolls up to Mid-Atlantic or whatever. Kind of doing that kind of stuff rather than just hard coding. Yes, this is in Pennsylvania every time. It's something to think about. It is one of the cool things where we can use something like hierarchies. Again, EBS, you had parents and children, so you could kind of do that. But with account hierarchies, you can do this, which is actually kind of an interesting topic in itself. Every segment you have in cloud should have a hierarchy, right? We can start using that. I've used hierarchies for reporting. I think we've used them for cross-validation, for allocations. What are your thoughts about hierarchies, either Tom or Mohan?
So on hierarchies, I would say, if you get into the cloud, I think the hierarchies become a lot more important than they were in EBS. Because not only does, like you said, the fact that you can have multiple hierarchies and versions and stuff like that you can manage. The benefit of that is that you probably will not be able to have a very, thinking about the word, a very easy maintenance financial report if you didn't have hierarchies, because then you would have to write, like I have seen a lot of people in EBS write financial reports, which actually have manual builds of hierarchies so that they can aggregate on a GAAP balance sheet or a GAAP income statement. And one of the things, as an anecdote, I would say is that I've gone to multiple companies on EBS and they've said, oh, we've got a lot of problems. We changed the way we are going to do this and our financial reports don't work. And they've said, how long will you take to write these financial reports? And I said, I will probably take, if you give me 6 reports, I'll do that in one day, all the financial reports. But I'll spend 2 weeks before that understanding your hierarchy or building one, because that then makes it easy for you to change your reporting. So I used to use this kind of functionality, I would say, quote unquote functionality in EBS as well, because it just made life easier when you walk into a client to do that. So I think that one of the things that works really well in the cloud is, one, it forces you to think about hierarchies because of the fact that it has functionality built in, which talks about inquiries, which talks about, like you said, cross-validation rules. Allocations will not necessarily work properly or easily if you didn't have hierarchies, and then you can have multiple ones. I have, like you said, you can have one for allocations, one for reporting, and actually we have two levels of reporting, one financials, one segmentation, one something else. So you can have as many hierarchies that you need and use each one of those for whatever end results that you need from those. I think one of the things that we start talking about when you start talking about chart of accounts is hierarchies along with it, especially in the cloud.
yeah, I was, I got a client now that's doing EBS still, and they asked to do some financial reports. And in EBS, you didn't have to have a parent for every line item on your P&L or balance sheet. You could use the roll-ups, and it showed the way you wanted it to show. But when Lee and I, many moons ago, were doing our first cloud client, we were building a financial statement. We didn't know anything about hierarchies. And so we put 25 accounts in the one line, and then we ran the report, much to our chagrin. We got like 25 lines that showed up on the report in FRS and the cloud. So like, oh God, you really need a hierarchy for every line item that's on your income statement or your balance sheet. And once you reconcile that, it does make a lot of sense. I mean, the better thing in cloud, you can use those parents in reports. You can write an OTBI report and use parents, whereas in EBS, parents didn't hold any values, right? So you really couldn't use them anywhere other than financial statements. So it's a change. It's kind of a change.
Now,
So
I'm sorry. The other thing that it kind of helps you to do is actually build your reports before you even have a hierarchy in place. You don't have to build them.
Right.
So one of the things that Tom and I will often do on our implementations, we list all our natural accounts, and you've got the parent they roll up to. First thing we ask for is just give me a trial balance. Give me a beginning of year trial balance so I can see everything, and just pivot it against your hierarchy. So I'm not even in the tool itself, it's just in Excel. So you can pivot this and just say, that's your balance sheet, right? And if it's not, you've got two issues. Either your hierarchy's wrong, or when you've coded something, you coded it wrong. But it's the easier tool rather than in FSG, okay, let me move this account and find that row and get the account over there and dump it down here. Or playing around with the hierarchy. It's just, okay, the hierarchy works from a pivot table point of view. If it works in pivot table, it's going to work in the application.
So different question for you, Mohan, again, because Lee and I obviously work on a lot of the same projects, same company and all. I'd be curious to see what you're seeing. There was a lot of like nirvana when we started these ERP implementations in the 90s, right? ERP was new, and a lot of things that we used to hear about was this global chart of accounts concept, right? And I've seen companies kind of go back and forth on it. Again, it's similar to the statutory thing. I've seen some companies in recent years go back to, you want your own chart, go ahead, have your own chart, as long as you're responsible for mapping it to the global chart. You can do that in ERP, you can do it in enterprise data management. I'm not a fan of that. I really prefer the global chart. You kind of institute that, except where it's statutory, only because I think it's less maintenance. But again, what are you seeing? You seeing anything with some of the companies you're working with? Are you seeing the global chart, or people going with disparate charts? Like, what's the trends that you're seeing?
I think the trend generally has been that people are going for the global chart of accounts, primarily because, like you said, I think it makes a lot of sense from a maintenance perspective. It's just not worthwhile spending time mapping 15 different chart of accounts. Somebody has to do it. You can say as much as you want.
It's not us, right?
Yeah, you can say whatever you want, that if you want to maintain it, it's fine. At the end of the day, the company as a whole is responsible for making sure that everything lines up. So even if you're maintaining it, there is somebody at corporate who's going to have to toe the line when there's something off, because somebody has to go and say, why is this off? Because if you continue to do this in multiple chart of accounts, unless and until the two reasons why, like you said, you use tools which kind of allow you to do the mapping. One is you're using a completely different system, and you're on your own system and not on the corporate one, for a timeline, for a time frame, or because of some very, very specific need that you require to use that. You maybe got an acquisition and the business is so unique that you want to keep on that chart of accounts and in that system. But I think most companies, even if they have that, that's for a certain time, because they want to transition. There's a lot of changes that they need to manage. There's a lot of change in usage of how they're comfortable using that other chart of accounts and the system, but then they're slowly moving here. So you probably have a year or two where they actually have a different system running with a different chart of accounts. The second is, I think a lot of companies do that as transitional when they acquire or get merged with other companies, because they continue for, let's say, a quarter, maybe two, continuing with them having their own chart of accounts, and then they eventually plan on getting them onboarded with this. And sometimes they wait for maybe the end of the year, or maybe the beginning of the next fiscal year. So they have 6, maybe 9, maybe 3 months that they want to wait to do that. But I think the trend has been that most companies are stipulating as part of the implementation partners kind of chart, saying you would like to have the initial discussion with the global chart of accounts.
So I'm going to go back to the segments we have in chart of accounts. So one of the Joseph came up, I think, with a question of, what do you have in your chart of accounts? So we talked through the required ones. We talked through some of the less obvious ones we've seen before, maybe state or some of these middle with 25 characters alphanumeric. I've seen a few clients want to do something with some subsystem in their chart of accounts. So the classic ones I've seen are, I want supplier in my chart. I want customer in my chart. I think Tom mentioned that earlier. I want the other one that comes up a lot is project. So having some kind of project number out there. So whether it's EBS or cloud, gentlemen, what are your thoughts on those?
I'll let Mohan go first.
Okay.
So I think that's a fair assessment. I think there are 50% of the companies that I've worked with who wanted projects in their chart of accounts, and the other 50% said, "Oh, we don't need that. We can manage it without that." Again, I think the question goes back to what Tom said. Do you need that in your financial reporting? If you don't, it's management reporting, which means that it can be in any place that you want it to be. And then if you do have that on chart of accounts, like we talked about before, and Thomas said, are you going to actually be able to, or not able to? Are you actually intending to allocate stuff and make sure that everybody captures it in the right place so that you get your reporting right? I mean, I'm at a client now. They have got about 9,000 values in their project segment, and they keep adding. I'm looking at every month when I'm still kind of supporting there, and I'm on the quote unquote COA request list email thread, and every month they have at least a dozen, if not more, that they add. And my question is, where are you using this? I've been here 2 years after the go live and supporting them. I still have not spoken to anybody who's actually using that in any form of reporting, at least from Oracle. They may be using it outside of Oracle. They dump out everything on Excel and do something. That's fine. The unfortunate part, what happens is that you start to create these values, and when you stop using them, you don't get rid of them. So
Right.
now, like I said, you've got 9,000 plus values, which is sitting there. And guess what? You have combinations. You may have balances sitting there in the past years. You may not have balances, but the combinations are there. And guess what? Most companies, from a quote unquote maintenance perspective, don't look at when they stop using segment values. And when they do that, they don't think about the combinations. So one of the things that I've instituted at this place, and I'm doing that with the other client as well, is you have to have kind of a quote unquote maintenance log or a maintenance framework for your chart of accounts. When do you add values? How do you manage to add values? How do you, liquidate companies? What do you do if you liquidate a company? What happens to the cross validation? Sorry, what happens to the combinations that you have for that company that does not have any more activity in it? And most companies don't worry or don't bother about end dating the combinations. I think it's a good idea to do that, especially now if you have cloud, because all of those now sit in your cube. Yep. Everything goes there, and it's just sitting there, right? So not that you have to worry about space. The fact that you have so many combinations just makes that cube unwieldy. Like in most, and just as a kind of an comparative, S-based cubes are supposed to be aggregating your data, financial data. There are a lot of companies who say, I want everything in my S-based cube. I want, my AP invoices and everything else. And I'm like, what are you going to aggregate on? The supplier or the invoice number? You have to understand what you're going to aggregate on. That's what the help of that is. But there are companies that have done that in on-prem S-base, not on the cloud. And maybe there's some companies who are doing it on the cloud as well. So I think the challenge happens to be whatever segment you have, and projects is a very common one. And then what happens is that company says, oh, now we're big enough and we are complex enough that we want to implement projects. Right. Guess what? Now the project segment is used for something else. And then you have projects, which is actually used for what you were thinking you would start using the project segment for. Mm-hmm. So I have seen two, projects and products. These are the ones that people have come up with, because a lot of companies say, I want a product P&L. It's possible in a different way, but it's also possible having it in the chart of accounts. And if it's important to you, one of the 6 or 8 could be a product. And then people start thinking about product as the item code. And you're like, hold on, time out here. it's supposed to be a 4-digit code where you aggregate by.
Mhm.
Just
Yeah.
primarily your line of business, mostly. That's what it rolls up to in most cases.
Yeah.
Is I sell all my printers, one code. I sell all my, I guess, keyboards or peripherals, one code.
It
So
usually
that's
maps
the
to,
level
it usually maps to an item category, either an ordering
Yeah.
category, an inventory category.
or higher. Yeah.
I've seen that and I'm okay with that. The project
Yep.
one, I see the same thing. And it's usually they said they don't have products in yet. And the question I was asked is, okay, you need to track lower than project, like, work breakdown structure. Because if the answer is yes, then it does belong in GL, belongs to projects, belongs to the
Mhm.
software. The other problem with projects, like, and I was asked this question, are you gonna push everything back to the project? Oh, yeah, absolutely. Depreciation expense? Well, no, we wouldn't push it back. Well, then you're not pushing everything back, right?
Facilities expense?
Yeah.
No, we're not going to do that. That's going to go at the department level.
Yeah,
Right.
yeah.
So the other thing if you're in cloud or actually in EBS as well, and you're thinking of doing projects in the cloud, you can start using a value set, which actually it saves your maintenance a little bit. And this is a big caveat. So you can save your maintenance by saying, if you're using Oracle projects, use the Oracle project number and just generate it in your chart of accounts. It fires off automatically. It's great. It's great. It does what it's supposed to do, assuming that you're actually doing all this kind of stuff and using the segment and chart of accounts. The issue you have in cloud is if you can't touch that value set, and you can't, it's a system value set, you can't put a hierarchy on top of it. See,
Right.
if you have something like you want to stratify and say, I want to see a breakdown of an income statement or whatever with capital projects and non-capital projects, you typically have some kind of hierarchy out there. But it's a system change and value set that I can't touch, so I can't build the hierarchy on there. So something to bear in mind if you're looking at doing that. As Tom said, if you're doing projects and you really are doing projects and you want to track that kind of stuff, Oracle projects is your tool to do that. Maybe you don't need it in chart of accounts. And I want to say the gigs we've done with projects, 90% of them don't have projects in the chart of accounts.
Right.
It's always, it is always an outlier of, no, I want it in my chart as well because it's easier to reconcile it.
So here's a question for you. This is, it certainly never happens in implementations that I do. But do you see clients that still do smart numbering? We mean smart numbering. Well, the first 2 digits mean this, and the second 3 digits mean something else. And then the last 2 digits mean something else entirely. And it's all in the same string. And that drives me absolutely crazy.
So the caveat is not a natural account. Some other segment that's not
Some other
natural
segment.
account.
So natural account, I've always ascribed to the, 1s are assets, 2 are liabilities, 3 zeros equity, et cetera. That I'm okay with. But no, like, the first 2 digits to the department and then the second 2 digits are, something. I used to see that a lot more, but I don't see, certainly again, not the gigs that we do. But do you still see that, Mohan? Or what's your opinion on smart numbering? You might have a different thought on it.
Well, I'll go back. There was smart numbering is something that one person who decided he actually has the brains to remember the smart numbering decides to do it. And this was way back when I started work, very, very long back. I'm not going to say how long back, but
Do we have green screens or different colored screens? Let's put it that way.
Okay, Lee, it was kind of green, mushy.
Okay, there we go.
And so he said that I need this. This is going to be how I'm going to manage my assets. We were actually implementing a very old system, but we were building it on. I'll tell you how long back this was because it was a unified database. So if you can think back that far, then you'll know how far back that
Lifetime.
So he said that I need this to be a 25 character field and it will have smart numbering across it. And I said, that's great. Why would you have a 25 number field which will have smart? Because he was actually capturing everything that he needed to know about that asset in that 25 digit number or 25 character space. And I said, you actually have other things in the system which will help you do that. You know that the color, the location, the wherever, whatever you want to call it, if it's this particular category like a motor car or it's something like that. And from then onwards, I have had the discussion, and I was recently at my, I think, 4th or 5th cloud client, and they actually did have smart numbering in their accounts. Mm-hmm. But luckily for me, there were 2 things that I learned at that client. One, that they were using smart numbering in their account segment, which somebody had set in place and they were just using the same numbers along. So nobody really knew what the full gamut of their accounting numbering means, but they were luckily using, like you said, Tom, 1, 2, 3, 4, 5 as their buckets for assets and liabilities, which was nice. The second thing I realized at that place was that they had been implemented and they were live for about a year, little less than a year, when they called me in because they were having trouble doing their reporting. And I was shocked when I went there. They had no idea what hierarchies were. They were downloading trial balances for their 14 companies in Excel, and somebody actually built the hierarchy in Excel and then wrote a macro to actually give them their reporting. And I looked at them and I said, really? And they said, how long will it take to help us fix this? And I said, well, the reports themselves will probably be pretty decent. And the reason I was called in was somebody in their IT department was actually building these reports in OTBI using the Excel as their mechanism to build the hierarchy. And obviously it was getting to be a nightmare as a maintenance perspective. So like I said, I spent maybe a couple of weeks, maybe 3 weeks, just building their hierarchy into the system. And then the report was there the next day. And actually they could look at that across the board, 12 months in one spreadsheet. Right? They didn't know SmartView. They didn't know it existed. They didn't know FRS was something that they could use to build their reports. They were doing everything in Excel.
I see that. I'm amazed at how often I see that. So we did have a quick question come up that I
Okay.
know the answer to in EBS, and I think I know the answer in cloud, but I will ask my fellow aces. So somebody asked a question, they've been using the chart of accounts for a while, and they don't indicate if they're EBS or cloud. And they've got a couple of misconfigured accounts, meaning they got a couple of accounts that were set up as an expense, and it should have been an asset. So I know in EBS, there was a process you could go back and reclassify the accounts and open the periods and recalculate retained earnings. Is that the case still in Cloud Lake?
So in cloud, you can still do that. So now you have to caveat it. You have to be able to back out all the activities, so reset everything to essentially, ground zero in that account. And again, that takes a while to go through. Hopefully, typically if it's an expense account and it should have been an asset, you may have a bunch of combinations you have to deal with there. But I digress. So you can back it out. You can then flip the sign.
Okay.
There is then a process you run. It's in the rebuild cubes area. For the life of me, I can't remember the process, but I can find it for our viewer out there. You can run that process. Essentially, goes and resets all the combinations to say it's now asset. In this case, it's now an asset, and then you can just reverse all the journal entries you just did to move those balances out, and then you're good to go. Again, that kind of thing, I've seen that a couple of times, and hopefully I'm a month in, I don't have any transactions, right. I've no store, even better. Yeah, it's been a couple of days and I noticed it, typically you don't notice it in that first month because it's a bounce. It doesn't really make much difference at that point. It's only when they get to the second month, it's like, well, why? You notice it. So hopefully you catch it early enough, but you can do that. Mohan, you've seen the same thing, right?
Yes. In fact, I did that at the client that I'm at. I had to do that multiple times after we went live because, well, they migrated everything from EBS and nobody knew better. And somebody who actually sets up the chart of accounts did not know. So again, I said, here's the rule and just follow the rule.
Yeah.
You have revenue, you have expenses, you have assets, you have liabilities, you have equity, nothing else. And then you decide that 1 is assets, 2 is liabilities, 3 is equity, 4 is revenue, and then you have expenses, period. Yeah. And you're right, it's called Misclassified Accounts or something like that is the name of the program that you run. And you're right, it's a pain if it's, and in my case, in our case, it was an expense account that had to be reclassified. They set it up as revenue or something like that because it was interest income.
Yep.
And so it was creating a problem. And guess what? Because of that, they had actually updated a whole host of things down the line because they were reporting off of that. And then obviously the signs were coming up differently. So now when we changed it to make it right, they had a cow because their reports didn't work. And so they had to fix it.
I always see the EPM guys, they have like a heart attack. Because when
you're right, that's the group I'm talking about.
They always have a heart attack. So why would you not flip the signs? And I'm always like, because when you load a trial balance, it should flip to 0. Yeah. And if you flip the signs, they don't. And you always get some convoluted, it's an opinion, right? I just happen to think mine's usually better than theirs. But I just hate when they flip the signs load into those queues.
And the other thing I just want to add for that sign point, it's often worth considering those the type of accounts when you're doing stat accounts. So we've talked, everything we talked through is financials, right? So it is income statement, it is balance sheet. But if you start doing stat accounts where I want to do an allocation based on, I don't know, square footage or head count, those are the two options you see. You start thinking square footage, that's not going to change that much, right? Marketing has got marketing will always have, a few thousand square feet. It's not like you're knocking down walls every month to rebuild this stuff out. So I typically set something like that up as an asset account. It holds its value, you only change it, you only make changes when they knock someone's wall down. As opposed to head count, where head count is fluid, you treat that as an expense type account. I always need some kind of entry in there. And again, it's stats, so I don't have to make it balanced. But you have it as, okay, always give me the right number. Don't tell me what the delta is. Tell me how many people are in marketing. Something like that.
Right. Yep.
Okay, so I think I'm running out of questions to see online. I guess as we wrap this up, gentlemen, you got any closing thoughts?
I don't. So we have, I guess, just to kind of look into the future. For those that did join, we actually had a pretty good size, and we appreciate that. Our intention is we will publish this and make it available online. And we have a couple of the grand names of the Oracle ACE community coming up. Kelly, I think we got two pretty strong stars coming up in the next couple of months. You want to let us know who's coming up, please?
I want to confirm everything before I announce anything, and I'm waiting on an email. So we're going to leave it as a surprise.
Oh, okay. So I know.
So that's our rookie producer. We will get a better one next month.
So I
That's
know
fine.
we have one of our attendees today. I know Susan has committed to attending a session. I think it's in. We're in April now. I think it's in June that Susan's doing one. I think we're doing something around security there. So stay tuned for that one. Hoping we've got a verbal that we're having an HCM session next month. So that will be getting publicized soon as that's confirmed. And again, this has been an applications ACES because we're the dumb functional guys to do that. So we're going to have some supply chain folks. We've reached out to some supply chain folks. EPM we're going to touch on at some point when we get a big enough crowd, and I know more than select staff from a table. We'll get some of our tech folks on there, some tech folks on here as well. But Mohan, I don't think if anyone else has got anything else, I think
Last thing's just a commercial. So depending on when you're watching this, this is recorded in April of 2022. The OATUG is having their Ascend conference in Las Vegas. I want to say June 12th to the 15th. Mohan will be flying in to make a special appearance one day. Lee and I will be out there. I think some of our other ACE counterparts will be out there as well. If you have not yet registered, please consider doing so. COVID restrictions are starting to go away. They did have an event last year in Florida. It was pretty well received, but we're expecting a lot more people to come on and come out and present in person. So if this is your first conference that you have not been out in a while because of COVID, please consider coming out. It's going to be in Vegas in June. So make sure you wear your bathing suit and attend some sessions, and we'll look forward to seeing you. With that,
In the bathing
no more
suit?
questions,
No.
Kelly. We'll wrap it up. What's that?
He said in your bathing suit.
Yes, absolutely.
I don't see any questions in the chat.
Obviously not an afternoon with ACES bathing suit. We don't have that much yet.
We'll
But
get
I like
some
the
merch
idea
and we'll get some Patreons and all those good things in the next couple months.
I love the idea of ACES in Vegas, though. With that, I'm going to say thank you for joining us today. This webinar will be recorded and made available to everyone who's registered and sent out to the attendees. Thank you.
Thanks,
Thank
Kelly.
you.
Thanks, Mohan. Good to see you.
Thanks
Talk
for
to you in
joining
Vegas.
us.
Thank you. Thanks, Lee. Thanks, Thomas.
Bye-bye.
Bye.